I don't know. It's not even that bad for real. We a little pixelated. Alright. Yo, what's up YouTube? Today I'm gonna try to explain what funded futures trading is to everybody that's been asking me to put them on and whatnot. So basically in the market, $6.6 trillion gets traded daily. So I was looking at that, I was like, damn, why can't I take a band of that a day? So I got my ass to work and started dating. So this is what I trade. I trade the Nasdaq, and I've made 3.3K this week, and I'm on a 6-day win streak. So you can say I'm kind of starting to get it, I guess. But let's get into how to read a damn chart. Alright, so first up, for real, you got the time frame. So basically, each of these candlesticks, we do the 5 minute. Each of these candlesticks is what price did in 5 minutes. So in 5 minutes, went up like 20 bucks or something. I don't even know. But basically, that's pretty much just the price of the indice. So you can see exactly what it was doing during this 5 minutes. Huge drop. So in futures, every dollar that this moves, so you can see that big drop is like $50. Each dollar with one contract is about 20 bucks. So, 50 times 20. You catch this move in 5 minutes, you could have made $1,000 right here, just like that. But you're like, well, how do I know when to enter a trade or exit a trade? This is what I'm gonna teach you right now. So what I trade is draw on liquidity and fair value gaps. So we're gonna go to a good example, not today because today was a shitty ass day, can I lie? So we're gonna go, let me find a good one. Alright, right here. So this one right here, we have, you come here, so you see, okay bitch, we got a candle right here. So in a candle, you got what price did. So the wicks do the damage, the bodies tell the story. So right here, see how the body is the thick part of the candle, and the wick is that little small part. So price went all the way up here, and then sellers brought it all the way back down. So the terms are bearish and bullish, which pretty much means up or down. So bearish as in down, bullish up. But basically, we have what we call, I'm gonna call this, okay, I'm gonna give it the same definition. I'm not trying to fucking sugarcoat it for y'all dumbasses, but we got, it's called a inverse fair value gap, and here would be a normal fair value gap. This would be a breakaway gap because it didn't even get traded into. Yeah, it didn't even get traded into. And then this one will just be like a regular fair value gap. Anyways, you can see, so when I say a draw on liquidity, what I'm talking about is the market moves either to highs or lows or inequalities. An inequality being a fair value gap or an inverse fair value gap. An inverse is like a big red candle with a wick and that big little space in between. That would be your inverse fair value gap. But right here, you can see this market, this little line right here. I guess we can move this down a little bit to this one. I think is the one that I wanted to sweep, and then bounced off this breaker, which a breaker box is another inequality that the market will go towards, not just fair value gaps, but it's like when a red candle and then a green candle And then all you gotta do, like I'm telling you, all this shit is just lines and boxes. This shit is not hard at all. It's just people like, they just overcomplicate it. But basically, got red candle, got green candle, draw a line. So if you look right here, oh, price, oh, as soon as it tapped it, went back up. And you know, once it swept that liquidity, tapped off the inequality, it used that to then, you know, a high it wanted to, because it's going to highs or lows. Once it swept that low, it wanted this little high right here. And if you look right here, tapped it to the wick, boom, took the high, we go back down, you know, and then it wants another low. And then this low that it wanted was this low right here, which we eventually swept right here. This shit is mad confusing, I'm not gonna lie, if you're just starting out, but if you just stick with it, I'm gonna try to simplify it and make it seem a little, ooh, I can do a little fireworks. What does that do? Oh! Anyways, let me stop. Yeah, it took me about 6 months to start making money from this shit, but, I mean, once I figured it out, I lost like 3 bands in 6 months, you know, because I was being an idiot. But I'm going to teach y'all how to, you know, trade properly, use good risk management, and make some money. So what y'all are going to want to do, go to NinjaTrader.com. You're going to go want ahead, open an account. Once you open an account, I think I already got one, hold on. Then you can go to, this is like pretty much a demo account. Can you not see? Was it only recording on this? Hold up. Ooh. Yeah, I just bought this fucking random ass recording software so I can record videos for y'all. I don't even fucking know how to use it, not gonna lie. Okay, well, go to ninjatrader.com, make an account. What you're gonna be doing is paper trading. It's with fake money until you can figure out your strategy. What's your strategy that I teach is a liquidity sweep, and then you target your next draw on liquidity. I think I took this trade actually. Yeah, this was Wednesday at night. Yeah, I took this trade. I think I made a grand off of this, just off of this line getting broke, the breaker respecting it, and then once that breaker got respected, it used that to break this. Bro, it's just literally a box, which is that inverse fair value gap. So basically, right here, pretend there's it's called consequent encroachment, which is the 50% level of that box. And you can see how price closed above the 50% level. And next thing you know, we hit our next draw on liquidity. Cashed that out. I think I cashed out right here for a band. Could have made 1.5K, but you know, not worried. So, and then once price takes this high, it starts retracing to this fair value gap. It like sometimes, you know, I said the 50% level. If it closes up below it, but sometimes when it taps it like this and then goes back up and then closes, even though it's like the 50% level is right here, this candle definitely close below it. But that was just because this gap right here, which I said was a breakaway gap, which means price will not trade back into it because of how strong buyers are. So once it tapped this, it pretty much just tapped it to the wick, and then price shot back up, and then we took this high, and then price then went all the way down and then took out these lows. Okay, and then price kept on going, took out these lows, these lows, these lows. I think I took this trade, yeah, this was Thursday, this was the low of the month. I took that trade, made a quick band. I think it was 4 bands, I don't even know. But I'm going to try to show y'all another example of basically what to look for. So basically, there's something called a time macro. It would be your first 10 minutes of the hour and the last 10 minutes of the hour. So my favorite macro to trade is 950 to 1010, because if you look right here, you got, hold on, let me find 3, 4, 2, alright, right here. You look right here, you got 930. So 930 market open. That's a move of manipulation. So this right here is going to sweep out a lot of lows. I don't take a trade till about 10 o'clock, till I know where the market's heading, to what drawn liquidity we're looking for. But we have this inverse for value gap. I think I took this trade, maybe. This was a while ago though. Or at least was looking at it. But basically, 950. You can see it kind of. This is pretty much a big inverse fair value gap. So this is a lot of sellers. So price really came up in here, couldn't even reach the midpoint of it, and just shot down and swept out this low right here. And once it swept out this low, it then retraced back into this new fair or inverse fair value gap, and then closed below the midpoint, and then swept out these lows right here. I didn't even sweep them. I think it just bounced, which is, it'll either take the body or it'll take the wick. And right here, it took the body. So it took, like, because basically, when you take a trade, you have a stop loss, which is the risk you're taking in the trade. I go for a 1 to 2 risk to reward. So I have to win 33% of my trades in order to make money. So I risk $500 to make 1,000. So I get a good entry, and then I just wait, and either hits my stop or hits my take profit. It doesn't really matter to me, because at the end of the day, if something goes wrong, it was definitely my fault, because you can bank on it going up, or you can bank on it going down. There's literally, you got a 50-50 shot, and with all this stuff that I'm trying to teach y'all, like, you see how it came up in here to this midpoint. Oh, it closed below it. We got sent lower, swept out these lows right here. I'm trying to show you all this right here. Swept out these lows. Once we came back up into this inverse fair value gap, swept these lows right here. You could have took your trade right here, your stop loss up here, aim for like a 1 to 2. That'd have been a band. In the matter of, I guess that trade would have took a minute to pan out, but you know, you can literally just, I've literally done it before. I've put my trade in and then I go to the bathroom at school. And you don't need some crazy ass setup. Like, I'm sitting here, just got a fucking big ass second monitor, TV, all this shit. You don't need it. I've been trading on my fucking school laptop or your fucking phone, matter of fact. It really doesn't matter. As long as you got Trading View, which is what I used to look at the charts sometimes, or that platform that I trade on is Tradeovate, which is what I used to trade funded futures. So for funded futures, and for trading in general, you got to be 18 years old. So you're not 18, you're out of luck. Maybe. Anyways, but that's besides the point. Not getting into any of that stuff. But then we keep on going, market's going. And like, people are like, oh, the market is just buyers and sellers, you know. It's gonna do whatever everybody's doing for the day. This market is an algorithm that you can easily learn, because all it wants is highs. You see this high right here? Oh, we swept that to the tick. You say that wicks do the damage, bodies tell the stories. So price came up here, swept all the liquidity, which would be people's stops. So their stop losses are probably at the highs. Because if you see this big ass down candle, you're like, oh, I'm gonna put my stop above here. I don't think it's coming back. So you're sitting there, you're riding this thing out, and you're like, oh, I'm up 10 G's. Let me keep on holding because I'm a fucking idiot. Anyways, they keep on holding, they keep on holding. Price comes up, stops them out. I mean, that's why you're in a trade. It's day trading. It shouldn't even be day trading. I call it 10-minute trading. I'm in a trade for less than 10 minutes, and I make $1,000, $2,000, and I'm out. I mean, you make your money and you bounce. And then you see, once we got this high, price came up here, swept out this low right here, and came down here. It left like equal lows, so we're probably going to sweep these later, which I think we did like a day later. And that was my big trade. Because once the market leaves equal lows like this, people's stop losses are definitely right here. So the market wants to go get those based on the algorithm. So basically they came here, swept these highs, we go down here, swept this low right here, and then we bounced back up. We didn't sweep anything right here. I think we got pushed off. Kind of pushed off a breaker. That could just be the market doesn't want to take the highs. It's just because people, like how I trade, my take profit is at the high. So sometimes the market will be like, oh, we're going to get the high. Psych! And then you get stopped out and you lose your break. I mean, you can't spell million without a couple L's. I mean, it's part of the game. If you don't like taking losses, go put the fucking fries in the bag and go work a job for 60 years. I don't really care. You do you. But I'm going to try and help y'all for free. I'm not selling no course. I'm just trying to show y'all what I know. Because the more you learn, the more you earn. And, you know, that's the truth of it. I'm going to be honest. So, yeah. I'll show y'all another example. We got this big fair value gap right here. I can draw it out. So basically, once this got disrespected right here, it acted like it was going lower, probably swept this low right here. So once it got disrespected, then we swept the low, and then it came back up for a retracement, then tapped off this, what is that? The breaker box, or order block, whatever you want to call it. And then, once it tapped off that inequality, because it's either going towards a high or an inequality, then we bounce down, we take out this low, probably a whole bunch of others if I go to a higher time frame. Usually I trade in, I start the day, I look at the daily time frame. I see my draws on liquidity, which would be highs and lows. So I sit here. Okay, this stuff is like a Fibonacci retracement. I'll get into that later. That shit's confusing, even for me. I'm not gonna lie. But there's so much stuff. But yeah, basically, you can see, oh, for Wednesday's low, that's pretty obtainable because we just gapped down. So then next thing you know, oh, we took out the low. And then now, we're going for retracement. Oh, this is called a gap. You can draw, this is also another inequality. Well, actually, never mind. Because of the wick here. If there wasn't a wick, you could draw like this and it'd be something like that. And then it's pretty much the same as like a fair value gap or inverse fair value gap. But yeah, you got highs, price comes up here, sweeps these highs, and comes down here, sweeps these lows, price comes up here, sweeps these highs. Like, this shit's, once you start, like, you gotta sit here and look at the charts for about 6 months. But once you start to do that, it becomes, you know, you can read shit like the back of your hand, you know. But you just gotta keep at it. And you know, I had my whole family tell me, you're a fucking idiot, go get a job, just work to go get into college. I'm still going to college just for shits and giggles. But and all this, I have my friends, you know, most of my friends actually supported me. I got some good ass friends, I cannot lie. Shout out to y'all. But it's mainly like my sisters. They're like, bro, I don't know if they just like didn't like the fact that they took a different path and are gonna be working or whatever. But I think I convinced them to start this too. So I'm trying to help. Like what I say, 6.6 million gets traded daily, and you don't think you could take a band from it? Because I know I can, and I know you can too. If you just lock in and fucking. Some of y'all are worried about the wrong green. I cannot lie. Smoking every single day. I mean, I used to do it too. That shit's fun. Until you're fucking broke. And you're going nowhere in life. And then what? Some of y'all gotta focus on the right things and just lock in. For just a little bit. 6 months. 6 months is all it took me. And I ain't the brightest person, but like, I'm good at math. I say this is my only strong suit, and this is kind of like numbers, but yeah, y'all can just keep at it. But yeah, that's a little video for today. I don't know how long that shit was, but yeah, I'm finna go doing more in depth later. If you got any questions, let me know. But I'll see y'all in the next one.